Welcome back. Well, it's time to get a sense of how your money is performing at intraday in the local bourse and major markets around the world that we track. And we have Willie Bong with the details.
Hi, Ladi.
At this time. Hi, Will.
Yes, the markets are, would I say they're a bit cautious, or they're down with the rain. It's quite,
it's quite
a rainy day today, so
yeah.
Everyone is taking a nap, I think. They're not just out of that sleepy mode yet. So the market is still very sleepy. We're seeing some reds, pockets of red here and there, mostly reds. But I hope that by the close of business, they would have been
so you think
well
investors go to bed when the rain's falling?
Yes, possibly. So that's what we're seeing. So, but we're going to be checking in with the markets, discussing with Ladi. The markets are red, mostly red at intraday. Sentiments are, I say, mostly negative. Well, we're hoping to see that the green pick up much later at the close of business. We see Nigeria's NGX down at intraday. At the time we picked it up, it was marginally down 0.03%. South Africa was the only gainer in the green at intraday, also 0.03% marginally up. Elsewhere, we see Egypt's EGX 30. The Egypt's EGX 30 is down 0.44%. That's not very good. And looking at what analysts are saying regarding that stock market, it says it's going to face a corrective movement towards 26,000 points. And that movement, market participants consider it to be logical. Now, the EGX declined 1.67% during Monday's session. And now, speaking of Monday's session, we see Kenya down in the Monday session in red territory, and that is no-brainer. We're hoping that market rebounds because we see that shilling declining and is really affecting the stock market in that country. Well, let's check in with it on trading at the fixed income markets. We have Caleb Alimi, is the chief dealer at Providence Bank. He joins us on the show. Good afternoon, Caleb. It's good to have you on the program.
Good afternoon, Will. Thank you for having me.
Let's kick off with system liquidity. Let's see what's going on there. We know it's tight. How tight are we talking about, and how it's impacting sentiments in the fixed income market? I believe you would share that with us.
First and foremost, the market has been very tight, like you rightly mentioned. On Monday, we opened with a negative about 1 trillion. Today, it's improved slightly to about 880 billion, still just about minus 900 billion in the of system liquidity. That has impacted markets, with bearish sentiments. We've seen quite a bit of sell interest across the curve. We've seen the sell interest on treasury bills, especially between the May maturities and the June maturities, the short-dated maturities. The implication of the negative system liquidity is that banks are funding at a very expensive rate overnight, among themselves at around 30.75%. That's quite expensive. And so what you do is to, free up whatever assets that you have. The closer the maturity, the better for you to, sell it off. And that's what we're seeing. We're seeing very sentiment on short-dated treasury bills, May maturities and June maturities.
Now, there's going to be an NTB auction. You've just talked about some short-dated bonds now, which is happening tomorrow, which is Wednesday, where about 142 billion naira worth of papers will be on offer. What are rate expectations, Caleb, considering the tight system liquidity? What are we looking at here?
A few things. Part of the things we expect, ordinarily, if liquidity remains tight, we expect yields or discount rates to, print a little higher. We've seen that on the 91-day and the 182-day paper, those ones are pretty sticky and pretty stable. The last 91-day closed at 16.24, and the 182 days closed at 17%, while the 1 year closed at 20.7%. However, given where system liquidity is and what's on offer, we expect that the 91 days and the 182 days may remain constant, but the 1 year could, track upwards closer to 21% or slightly over that, depending on how desperate investors are, or if liquidity sort of improves before the end of today. There is expectations that, there could be the FAC allocations could be paid into the market today, or at least tomorrow. That would also impact liquidity, and it will then determine how people will bid at the auction.
Now, just speaking of liquidity, speaking of gains, and it's more like declines now. It's looking like the world's best performing currency, which is the naira, which was the best performing currency in April, is taking a breather from its month-long rally. As we're seeing the dollar strengthening and sending chills down the spines of emerging markets from Nigeria as well. And the naira is seen to be moving from about 1,050 naira from last week close to about 1,250 naira this week. What's driving this? What are the major drivers?
Like you mentioned, it's the best performing currency, and because it is best performing is why we're seeing what we call take profit. The Naira has strengthened about 30% over the last, almost a month. It's only natural for the people that provided that liquidity to take some profit. Take, for example, many of the FPIs came into the market around 1617, and then the Naira strengthened to about 1,100, 1,150 or thereabouts. Look at that spread between where they came into the market and where the market is currently. They've already made 30% within 2 months. I think every smart trader knows what to do is to take profit rather than wait for the markets to take out all of that profit. So that's what's happening. It's simply foreign portfolio investors repatriating some of the funds they brought in.
So we're seeing oil prices dipping, and this is, bolstering the dollar because the dollar is really strengthening because the Fed might not be cutting rates anytime soon. Do you think this is going to be a sustained pattern? Do you see the Naira devaluing or declining further in the near term?
More interestingly, the CBN continues to, intervene at the market at different times. Today we understand they're selling to BDCs. And they will probably come to the interbank market at some point, even though, the governor said they don't want to be the highest supplier of dollars to the market. They will continue to find ways to stimulate foreign investors. This is why we think interest rates in the fixed income space will remain elevated, just so that they can attract, more dollar portfolio investors. So with that sort of supply coming into the market, we don't think the Naira will depreciate too much. It could continue to lose some value, and then at some point, it will become attractive for entry again for more portfolio investors, especially as our interest rates on our, government securities remain elevated. Okay,
I'm still speaking of the government and the plans to, attract more Forex into the market. You see that it's planning its maiden Forex foreign currency denominated bond issuance in the month of June, right around the corner. What makes this debut Forex bond scheduled for the second quarter different from the regular Euro bonds? I'm sure we would like to know what the difference is and what, interest it holds for investors.
All right, so first off, Euro bonds are dollar-denominated bonds, but they're issued outside your country, which means Nigeria raises an instrument in dollars and it trades it in outside its country, maybe in London or in New York. Those are Euro bonds. However, if Nigeria issues a dollar-denominated bonds that is traded locally, maybe on the NGX, on FMDQ, or on other platforms locally, that becomes a Forex bond. And that is what this bond is about. It's the first of its kind, being that to be a dollar bond, but issued locally here in Nigeria. The federal government is targeting, dumb balances of many Nigerians, by offering an attractive means of investment for them to, plug all those idle balances, so to say. And that's what makes this bond different from the Euro bond, and that's what makes it unique. And that's why it's a first of its kind as well.
So what instruments are investors currently trading and what end of the curve as we speak right now? As we speak, what are they trading?
Short end mostly. What banks are trying to do right now is create liquidity. On the other side, other investors are positioning for the primary auction tomorrow. Many of them are interested in the one-year paper because that's where you get the best yield pickup, right? So the yields have been around 26, 27% for a long time. We're expected to still hover around that space. So that's what investors are looking for. So however, for banks trying to create liquidity, many of us are trading the short end of the curve, the May maturity, just to create liquidity for our obligations.
Okay, thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing your thoughts on business and corporate. It's good to always have you.
Thank you, Will.
Now let's look at the Middle East markets where major equities traded with positive sentiments. At intraday, Abu Dhabi was up 0.05%. We see Dubai also up at intraday 0.2%. Still within the region, Saudi and the Qatari indexes traded up over 0.5%. We see 0.54% and 0.51%. Now let's look at the U.S. markets where we see stock futures and higher, in pre-market trade. In early trade today, the S&P snapped the 6-day losing streak boosted by a rebound in tech stocks. We see the S&P 0.08% up. Dow Jones is up 0.07%. Nasdaq futures 0.14% up. Now we're seeing these markets really boosting, and we're seeing Tesla also going to be issuing reporting its earnings today, and investors are going to be seeing what's going to be coming out from that stock because the stock price is already down more than 40% as we speak. And we'll just look at Asia markets right now and see very quickly what's happening in the Asian market. Nikkei 225 in Japan is up 0.3%. Its closed trade for Tuesday Very well in the green. The Kospi in South Korea is down 0.24%. Hang Seng Tech Index, that's in outside China, shows is 1.92% up, nearly 2% up. We see mainland China, Shanghai Composite, let's look at that quickly, is down 0.74%. And we see the S&P ASX 200 in Australia, 0.45% up. Markets are not doing badly in that region, especially from the gains from Monday's in the tech sector on rebound on Wall Street. Investors are assessing this flash business activity and they're just, buying into this stock. So, Ladi, with all this happening in these markets right now, it's kind of like this is the right time. You talked about Tesla. This is the right time for investors to come into Tesla. I think this might be the right time because speaking from what analysts are saying, we were discussing earlier, yes, for the year. So this is probably the right moment to get into Tesla.
But you don't want to catch a falling knife at this point.
You don't want to catch a falling knife.
You don't know where the bottom will be at this point.
No risk, no gain, Laddie.
Exactly. And yeah, Justin, Caleb actually confirmed that while we're talking to him.
Okay.
That the CBN is resuming Forex sales to BDCs at 1,021 naira, per dollar, at this time. Because we've already been getting complaints, from friends around me talking about the naira is weakening again, the naira is weakening again. But I guess this will put them to rest.
Yes, definitely.
With CBN
and we see
selling at 1,021 naira to BDCs.
coming in with that surprise move today.
All right, thank you so much, Will, there for giving us the details from the market.